Hello friends, we are back in the show and we'll be starting. We'll be conducting a show like this wherein we'll find the hidden gems in the market which are at very base level, means very at the support levels, and we can pick it up from here, let the rally go and we learn a lot. So firstly picking off from that is WELSPUN India Limited. What does this company do? It is a textile sector company. This much fundamental, it's okay. Rest fundamentals will do from the data we have. So moving on, we will be analyzing it firstly from the P perspective. What does P perspective tell us? So P perspective, here we cannot take the company's P because it is directly correlated with the market price as of now. So we'll pick it up with the sectorial P. Sectorial P is 16.44. And what is the company's EPS as of now? So we go into financials. There we can find it out that what is the company's P as of now. Due to Wi-Fi issue is taking some load, so we'll sort it out. Yes, so here we can see it's 6.06 EPS, and with that we have a market means sectorial P ratio of 16.44. What does this mean? 16.44 multiplied by 6.06, the answer what comes is the actual value what the stock must be trading as compared to its peers, means what is happening in the sector. So ignore it as of now. We'll move ahead, then you will be able to correlate everything. So we'll directly move on with the financials. What has happened in the financials? So here comes the financials, starting with the overall. What is the overview? Starting with the revenue, 6049, 6526, 6741, 7340, 9311. Continuous increasing trend. Okay. Another one is net profit. Increase, decrease, continuous increases. Then comes to EPS. Increase, book value, increase. See, here in 2019, we had low net profit and low EPS. Then also the book value is positive. Why has it happened? Because the debt of the company was lowered in that year. So book value per share increases. Returns. What return does it generate to the market? To the equity participants, means we can consider it as a market. In 2022, means 21-22 year which has just ended, 15.13% it has given to the market participants, where inflation is just near about 6%. If the stocks give you 15%, which is 2.5x the inflation, that is a good company. And further, what is the debt equity ratio? In 2018, high debt 1.14, not recommended for investing. 1.07, still high. 1.07, still high. Debt must be lower than 1. Means if debt and equity are equal, it's okay. But it should not be that equity is 1 rupees and debt is 1.2 rupees, 1.1 rupees, 1.5 rupees. No. So in the last year, which has just closed on 31st March 2022, its equity to debt to equity ratio is just 0.8. So it is manageable. The debt is also manageable. Going further, what happens with the shareholding? So promoter 70%, 70%, increase in shareholding by 0.36, and then stable. This shows promoter are not selling a single share in the market at this price or at any given price. They are not willing to sell. Let's move to FIS. What FIS are doing? FIS 5.9%. This is quarterly. Means if we consider from April 21 to March 22, what happened? So in March 21, last year when the financial closed, FIIs were holding just 5.9%. But this this year end means 31st March 22, when the financials has closed, they were holding 8.52%, which means there is roughly 2.5% increase in FIIs holding. Let's move to DII. What are DII doing? They are selling 7.25, 5.25, means they have sold 2%, FII has bought 2%. So net on net equal. What happens with public? Public share are always same. So no, उसको देखने में कुछ इंटरेस्टिंग है आपको. Then moving on to others. Others means some ESOPs or something would be given. That will be others. So that is also not much we'll be looking into. Moving on, income statement. This is what is meant. We'll be looking at annual. So we'll get a 4-year, 5-year comparatives. So sales in the last year, 7340. Sales in the current year, 9311. Which means there is roughly around 20% increase in 20 to 25% increase in sales. What has happened to revenue? Net profit, the company. Last year it was 550. Current year it is 606, which means roughly around 15 to 16% has increased. So looking at the fundamentals of this company, the company is a must buy company. What are its strength? Means company's strength is very important. So company is able to generate revenue from its asset they are holding. So this is what the main thing is. The company's management should able to generate the revenue from its asset, and the company is doing it. As you can see here, strength. First strength is only that efficient in managing assets to generate profit. ROI, ROA, return on asset, return on equity, both are increasing, which means the company is generating value for the company and also for the equity shareholders, which are the market participants. So this is the share is currently up by 1.55 rupees, 2.38%. So moving on to now technicals. What can we do in the technicals? Let me share the screen for my technical. Yes, so here we can, this is the chart of WELSPUN India, 1-day chart. Okay, no indicators I have placed. It will create a mess here. So I will remove all the indicators. We'll again restore it and we'll share how do I use the indicators. Okay, so what you can see here, this is a from starting from here, the arrow which is shown here till today, it is 595 days. We can see here this level was broken, tested, broken, tested, accumulation zone, broken, tested, accumulation zone, broken. So what we can see here is the company is not able to break these levels, 70 rupees on the upside and 61.5 rupees on the downside. The chart which we are seeing is not able to break this trend line. So this zone is called as accumulation zone. And what to do on the accumulation zone? We should accumulate the shares. So if we get a really small dump to 62, 63 rupees, I think 63.45 is today's low only. So what we can do is we can accumulate the shares. And as what the past 595 days trend says, that we come to this trend level, we sustain there, we jump from here. And when we jump, the jump is very high. As you can see, this was entirely an accumulation zone. And we broke that accumulation high. We went to 121% up, directly from 77 rupees to 171 rupees, which is 100 rupees hike. This is what is the gem we have to find out in the market. And this is what the first gem is. So here what I have shown on the charts, 595 days support on this zone, 70 on the upside, 61.5 on the downside, we should hold that. If it holds this time too, means what has happened in past 595 days, if that happens now also, we may see a massive pump. And in very short term, though we can't say, medium term, 6 months to 9 months, we can see the price above 100 rupees. 100 rupees is, means currently the price is 66.75. If we count 100, so it comes to around 45 to 50% increase in your return if you buy the shares. If you don't buy it, you won't earn anything. If you buy, you will earn. So if, what if it goes up? I've told you what if it goes up. What if it goes down? Now how to calculate that down? Once 61.50, the share closes on weekly basis. This is the daily chart, so I think you won't understand. So I'll switch to weekly charts. What weekly says. One week, touch the low, touch the end of the trend line, again up. Second last week, slight up from the last touch of the trend line. Third week, slight up from that touch too. So we are seeing here it is forming a higher low. Month three candles of a week higher low. This is not something we could derive it from here. So what I'm telling you here is, if it closes on weekly below 61.50 rupees, 61.50 means around 10% from here. If it closes down 10% from here on weekly basis, not daily, it will do anything because the market is not proper as of now due to inflation, Fed, US rate hikes. So it should close below 61.50 on weekly basis. If it closes, you should book that 10% loss, exit from the trade. But if you are a long-term holder, long-term investor, what you can do is, if it breaks 61.50, what you have to do is, you have to buy it near 40 rupees. 40 rupees is 35.85. You should buy here. After that also it falls. Then your final buy will be at 20 rupees, not below that. But I would recommend not to buy at 35. Either book the loss at 61.50 when it closes on weekly, exit from the trade. When it comes down, enter. This will save your 30 rupees gap. 30 rupees gap, it will save for you. So, and when those prices comes down, but it doesn't reach 31.85, then what you have to do? Wait for the price to break the upper trend, means 70 rupees, which is here. 69.95 means we can pick around 70 rupees on weekly basis. So what we can do here, when the price falls to, assume that the price falls to 50 rupees, then it goes up. And when it goes up, if it breaks 70 on weekly basis, you have to enter the trade back. And here, if you enter the trade back, it will take you through the rally on the upside. So this was my first gem. I'll be sharing more gems. I'm planning to make one video like this every week. But if I find more gems on daily basis, I'll be making a video on daily basis. Show your support, like, comment, share, subscribe to the channel, and show some love. Thank you, guys.